Hello everybody, welcome to my new Sunday market breakdown. Okay, so let's start on the DXY US dollar chart of the Forex market. So we are at the weekly chart, and what we see, we have this week a weekly bearish candle close, a nice one. And we had here a weekly minus 60.80 Fib completion. If I take my Fibonacci from the low to the higher, you have the minus 60.80 where the sellers are kicking in. We already have here a kind of deceleration of 1, 2, 3, 4, and maybe this one, or almost a fifth week decel on that zone, so we can have more downside momentum till possibly this weekly institutional candle that works like a magnet. So if I look closer now to the daily, because we have that weekly bearish candle close on the weekly, we can look for more short momentum. So what we can see is we have a little battle between the bulls and the bears right now. So what I can see is that we had here a nice shoulder one here, the head, and then the shoulder two. We broke this lower high here, so we broke it very impulsively, and now we are coming correctively to the downside. So this is a sign that we can have that bullish momentum from that shoulder one, head, shoulder two on this daily zone, and that we can go to the upside again. Sorry. So what I can see then is, okay, if we can have here some bullish momentum, we can make the possible natural W. So we have same lows because we have that weekly bearish candle close. So we can expect same highs also here. So then I went to the 4-hour, and then I want to see here some diesel, and then we have here a nice shoulder one, head, shoulder two also sitting. So this can happen for the daily natural W to play out, but we are at a bullish daily structure zone. We have here some very nice zone, some here resistance, support, resistance, resistance, here some support again. So it's a very strong zone on the 4-hour. So we will see what will happen. I expect that the DXY can go to the upside, and here we can have some deceleration to go more to the downside. So that's what I can see right now. We'll see what will happen then. So the first pair of this week is GBPJPY. So if I go to the weekly chart, we have here a weekly bullish candle close. We are at this massive weekly selling zone where the sellers kicked in on this box, but yeah, the bulls are still present. We can break out of that resistance zone here. So this can possibly happen, sorry. So if I go to the daily now, you can see on the daily we are making a bullish M. So we are making here the first leg, the second leg, third leg, fourth leg, and then a possible fifth leg till the daily minus 27. So I drew my daily zone of interest at this institutional candle because this works like a magnet. And you see already that the price came back from this horizontal fake out daily black line zone. So we already see here the price a little bit coming correctively to the downside for more upside momentum, as you can see. So it's not that impulsively to the downside. We have that push to the upside and then that corrective nature. That's nice to see. And on the 4-hour chart, what I can see right there is if we have here a possible deceleration, because we are already under our daily zone of interest. So this can be perfect deceleration. So we have here that first candle, second candle, and the third candle, and then the possible fourth candle for more upside momentum till the 171.1 like this. And for around, yeah, 5% will be enough. It will be enough, 5%. So this can be the trade for the diesel. If you don't have that, I need to see a pattern, something like this. If you have here kind of small break, then I need to have the shoulder one here, the head, shoulder two, or we have here that kind of bullish M here. So the first leg, second leg, third leg, fourth leg, then the trade around this lows here, higher low, and then we can go to the upside. So that's what I can see. We need to have some patience there. What will happen on GBPJPY? Then the next trade is CHFJPY. So CHFJPY has here a weekly bullish candle close. We are rejecting from these weekly highs. So we need to be careful for that part. We are still making these higher highs and higher lows on the weekly. so we can have that push again to the upside. So yeah, and if I look back, what we have back in history, nothing too much. So this is unknown territory. So we have just that weekly bullish candle, so we can look for more upside momentum. So if I go to the daily, what we can see on the daily is we have here that nice bullish M, bigger bullish M pattern. We also broke this lower highs here, lower high, lower low. We broke it here, so nice. We are bullish. We have that bigger bullish M here, and then that smaller bullish M within it. So that's why I drew this daily institutional candle here at my daily zone of interest. I took the Fibonacci from the higher pattern, from the low here to the high. You can also draw it like this. It's actually the same like this. So yeah, so on this daily zone of interest, we just touched this zone of interest. We have also a first tap, a second tap, and a third tap of the trend line, so we can expect bullish momentum to kick in from that point to touch the daily -27 or the daily highs here. So I went into a 4-hour chart, and what can I see on the 4-hour chart? We already have here a 4-hour bullish candle at the daily zone of interest. So what I expect is to have maybe a diesel box. So we can have here that first candle, second candle, already a blue candle, then the third candle coming back. And then if that closes, we can set our limit at that fourth candle for more upside momentum. So like this. And the daily -27, the round number to the downside, 15.850, like this. Good. This will be my daily TP point. And yeah, my stop loss will be around 4%. It will be enough, 4.1, like this. So this can be a nice trade. So we need to see what will happen there, what we can see. So the last pair is US oil. So if I go to US oil on the weekly chart, we are in a massive downtrend here. We are making lower lows, lower highs here, as you can see on the line chart. Impulse, so lower high, lower low, lower high, lower low. So what we see now, we rejected from that weekly highs. As you can see, supply and demand also sitting here, very nice zone, acting as resistance, support, resistance, resistance, weekly bearish candle close, very impulsive. And then the second one also after. So I went to the daily chart. And what can we see on the daily chart? We have here that bearish W. So as you can see, I will draw it. This is our first leg, second leg, third leg, fourth leg, and a possible fifth leg for more downside momentum. So that's what I can see on the daily chart. So if I go back to the candle chart, you can see that we have here that institutional candle sitting. This is our bearish W. I took the Fibonacci from the higher to the low, but then I saw that we touched the daily lows. So then we can expect the same highs. So we need to have a pattern reset at these daily highs here. So if I go now to the 4-hour chart, then I want to see here some diesel or a pattern if we can break above that, and then we can make this kind of shoulder 1, head shoulder 2 here, or like the diesel here, that's deceleration box. So we already have here the first candle, second candle, then this one we don't need to count. Then if the market opens, we have the third candle, and then if it closes like this, we can set our limit on the fourth candle. And yeah, we can go to the downside. My daily TP at 1.50 for around 4% will be enough. It will be a good one. 4.1 like this. So this will be a good entry trade. So yeah, that's what I can see on US oil. Also having some patience on that trade. And yeah, I hope you have a nice trading week, and see you next week. Bye.